Let's just continue our discussion. So we're done with partnership. Doon naman tayo sa second one, which is co-ownership. Sir, what is co-ownership? Let's have an illustration. Okay. For example, class A and B, okay, receive a property. Right? So yung property is an income-producing property. Let's say it's a farmland. Ayan. And then sa farmland na yan, okay, drawing natin, sa farmland na yan, merong 200 mango trees. Ayan. Now, sa A and B, na-receive nila yung farmland, pwedeng in two ways. Okay? Pwedeng na-receive nila yan through inheritance. Let's say si Mr. X, which yung tatay nila, for example, namatay. Na-inherit nila yung farmland na yan. Or pwedeng through gift. For example, si Mr. Y, example, uncle nila, niregaluhan sa ng farmland. Okay? It can be through inheritance or it can be through gift. Now, yung inheritance na yung class, okay, the act of transferring the title, okay, or the act of transferring the property from the father to A and B will be subject to estate tax. Kapag naman gift, okay, or donation, it will be subject to the donor's tax. Okay? Donor's tax. Now, class, since yung farmland na yan is an undivided property, so ibig sabihin, for example, class, isang title lang yan. Okay? Dun sa title, isa lang pangalan. Undivided property siya. Ang tawag natin kay A and B, they are co-owners. Okay? A and B are co-owners of the property. So again, meron 200 mango trees yan. Okay? Ang pinag-uusapan natin, class, is hindi yung act of transferring the property to A and B. Okay? Kasi yung act of transferring, subject yun sa transfer taxes, which can be estate tax or the donor's tax. Ang pinag-uusapan natin dito, class, okay, yung subject natin is the income from the farmland. Okay? Income from the farmland. Yung income na makukuha mo pag binenta mo yung mga, well, yung mga fruits from the mango trees. Okay? Yun yung pinag-uusapan natin. Now, yung general rule natin, class, is, okay, co-ownerships are exempt from income tax. Okay? Hindi ka magbabayad. Yun yung general rule natin. Okay? Assuming na yung ginagawa lang ng co-owners are preservation of the property. Okay? Sir, ano yung preservation of the property? So, let's say, well, siguro, wina-water nila. Okay? Watering, ano pa? Watering, okay? Fertilizers kung kailangan, okay? What else? Let's say, yung mga pest control, maintenance kasi yan. Pine-preserve nila yung 200 mango trees, okay? Kapag preservation of the property lang, exempt yan. What else? Kapag ang ginagawa lang nila is collection of the income. Okay? So, syempre, yung mango trees na yan, nagkakaroon ng fruits yan, tama, during harvest. During harvest, pwedeng binebenta sa market yan. Okay? Pag merely preservation or maintenance of the farmland, and then kinukolekta lang nila yung income, exempt from income tax yan. Got it? Now, ito yung exception natin. Yung exception natin, class, magiging taxable yan if, okay, yung action of the part of the co-owners are beyond mere preservation. Okay? Beyond mere preservation. Sir, ano ibig sabihin ng beyond mere preservation? For example, class, yung income from the farmland, ang ginawa nila, ni-reinvest nila. Okay? Reinvested. So, for example, ang ginawa nila, class, from 200, nagdagdag sila ng 100. So, naging 300 mango trees. Okay? O kaya naman, ang ginawa nila, yung income from the farmland, pinambili nila ng apartment. Okay? And then, yung apartment, units, pinaparenta nila. Okay? So, yung income, nire-invest nila. Pag ganun yung ginawa mo, magiging taxable ka. Okay? Taxable as a regular corporation. Alright? Now, pag sabing taxable as a regular corporation, obviously, magiging subject yan to RSET, magiging subject to MSET. So, lahat ng concepts sa corporation, mag-a-apply dito. Right? Ano pa? Pag beyond mere reservation and the property, okay, remained undivided for 10 years. For more than 10 years. Okay? 10 years. So again, pag beyond mere preservation and undivided for more than 10 years, okay, magiging taxable siya. Got it? Pero kasi, to be more specific, actually, pag pumunta ka dun sa G-sheets natin, dun ka sa co-ownership, nandun pa rin siya sa same sheet as partnership, sa baba mo lang, co-ownership, nakalagay dyan, general rule is, co-ownerships are not subject to income tax. Got it? Exception, may 4. Basahin natin. So, class, mag-focus ka lang doon sa mga naka-highlight na words, yung mga naka-bold na words. Kasi ganito yung technique dyan, class. Di ba sa taxation, saka sa law, RFBT, maraming mga requisites yan. Tama? So, ginagawa ko, nag-aaral ako niyan, yung mga important words lang yung inaalala ko. Kasi walang way para makabisado mo lahat yan. Okay? And in fact, class, actually, nung nag-board exam ako, okay, hindi ako nag-memorize ng anything. Okay? So, to be honest with you, kasi medyo short term kasi yung memory ko. Okay? So, hindi ko na ako nag-memorize mga ganyan. More of understanding and familiarity. Ganun yung ginawa ko. Now, for tax, parang 2 days before the board exam, dun ko lang talaga memorize yung mga tax rates. Pero all throughout, hindi talaga. Okay, ginagawa ko lang yung mga important items, yun lang yung inaalala ko. For example, this one. Exception. Co-owners appoint an administrator who manages the affairs of the co-ownership by making investments therein from which profits are realized. So, ibig sabihin, pag ni-reinvest na, saan yan? Reinvested, taxable na yan. Tama? B. The co-owners use the common properties of their income derived therefrom with intent to make profits. Bakit ka ba nagre-reinvest? To make more profits. Okay? Letter C. When the property remained and undivided for more than 10 years, okay, magiging taxable ka na. And letter D. In other instances where the co-ownership activities are already beyond mere preservation. Okay, so yun lang. Basically, beyond mere preservation and mere investment and yung 10 years. So basically, yun yung exceptions. Pag ganyan, magiging taxable co-ownership na siya. Okay, so, para mas malinaw class, maglagay tayo ng illustration ulit. Okay, so, ayoko sanang erase to, pero wala tayong space. So, sige, erase ko na. Tandaan nyo na lang ha. Okay. Para magre-refer tayo dito. Sige. Okay, so, ano gagawin ko dyan class? Ito yung co-ownership na taxable. Taxable. Co-ownership. Right? And then, later mamaya yung exempt. Sa pag-taxable co-ownership ka, obviously, magbabayad ka ng RSIT and MSIT or MSIT. 25% or 20%, 1% or 2%. Got it? Now, meron tayong co-owners, A and B. Tama? Yung share ni A and B from the income of the co-ownership, sa example natin, farmland, will be treated as dividends. Okay? Kasi magiging regular corporation siya. So, dividends yun. And we know dividends are subject to 10% final withholding tax. So, in this case, C and B will be treated as shareholders. Meron silang sarili-sariling ITR. But since yung dividends na yan, na subject na sa final withholding tax, hindi na yan mag-form part of the ITR of A and B. Okay? On the other hand, if the co-ownership is exempt, ibig sabihin, mere preservation lang of the property. So, tingnan natin. Si A and B, tawag saan nila, they are the co-owners, meron silang sarili-sariling ITR. Okay? Yung share ni A and B, okay, from the co-ownership will form part of their ITR. Okay? So, ibig sabihin, they will be liable on their separate capacity. Got it? Uy, sir, parang familiar yan ah. So again, pag exempt 0%, familiar yan. Because ito, yung concept nito, yung taxable co-ownership is the same as yung taxable partnership. Ito naman, same concept as GPP, the General Professional Partnership. Kaya sila pinagsama-sama yung topic sa isang handouts kasi, again, related yung concept sila. Alright, so let's apply that to our handouts. Let's go to number 4, problem number 4. A and B are co-owners by inheritance of income-producing property. A and B merely preserve and collect income from the said property, data on the co-ownership and co-owners for the current year as follows. So class, yung sinabi dyan na A and B merely preserve and collect income. Well, nandito kanina yan. Preservation of property and collection of income, ibig sabihin, exempt co-ownership yun. Tama? So, ibig sabihin, let's compute for the income tax due of the co-ownership. Let's go to number 4, letter A. Ganito gagawin ko dyan class. So, ito yung co-ownership. Meron siyang gross income, okay, amounting to 2 million. Meron siyang allowable deductions of 1 million. Since exempt yung co-ownership na yan, ang tawag natin dito is net income. Okay? You don't call this net taxable income kasi wala namang taxable income ang exempt ownership. Ibig sabihin class, yung tax due natin, answer natin dyan is 0 because exempt siya. Tama? Now, gawin natin class side by side. Pakita rin natin what if hindi exempt. Okay? Pero ito na yung sagot dyan. 0 yung sagot dun sa income tax due of the co-ownership. So what if taxable siya? Lagyan natin dito, taxable co-ownership. Alright, so taxable co-ownership, ganito gagawin natin dyan. So meron siyang gross income, 2 million. Okay, you have allowable deductions of 1 million. You have net taxable income of 1 million. And then because treated siya as a regular corporation, multiply natin by 25%, the tax rate. Ibig sabihin, tax due natin is 250,000. Alright, so therefore, yung net income natin to be distributed to the partners is 1 million minus 250, 750,000. Got it? Okay, so balik tayo dito. Which is naman yung given sa atin. Okay? Kasi yung given sa atin, exempt co-ownership siya. Let's compute for letter B, taxable income of co-owners A and B. Okay, so si A, tignan natin. Meron siyang sariling gross income. Okay, 400,000. This is partner A. Alright, and then si partner, okay, meron siyang allowable deductions na 150,000. Alright, and then class, yung share niya from the GPP, share niya from the co-ownership. So syempre, walang sinabi kung ano yung sharing nila. Let's say 50-50 sila. So A and B, A receives 500,000, B receives 500,000. Okay, so lalagyan natin dito for partner A, meron siyang 500,000. Okay, ang tanong sa ating class is taxable income. No? Net taxable income, 400 minus 150,000 minus 150 plus 500,000, you get 750,000. 750,000 is the answer for partner A. Since A is an individual, pag ang tanong sa'yo dito, income tax due, syempre gagamitin mo yung tax table. Does that make sense? Okay. Let's go to partner B. Si partner B naman, okay, meron siyang sariling gross income na 350,000, allowable deductions of 200, and then meron siyang share from the co-ownership na 500,000. Alright? So, yung net taxable income niya is 650,000. Again, you use the tax table to compute for the tax due of partner B. Okay, yung sagot natin. Okay. Actually, yun yung sagot natin sa problem. Pero, i-compare natin siya, what if taxable co-ownership siya, alright? Ibig sabihin, beyond mere preservation. Yung net income of the taxable co-ownership na 750,000 will be declared as dividends to the partners or to the co-owners, okay? A and B will receive, okay, 750,000 divided by 2, 375,000. So, ito yung share in A. 375 and 375,000. So, computin na rin natin yung final withholding tax at 10%. 375,000 times 0.1, that is 37,500. Okay? So, dividend tax natin, again, is 10%. That is 37,500. Since dividends na subject na sa final withholding tax, dapat hindi na yan mag-appear sa ITR ni co-owners. Tama? A and B. So, ibig sabihin, class, pag kinompute natin yung net taxable income of co-owners A and B, ganito lang siya. Meron siyang gross income si A from separate capacity, okay, 400,000 minus allowable deductions na 150. Answer na natin dito, class, is 250,000 for partner A. This is the net taxable income. This one, hindi na siya papasok dito. Tama? Kay partner B naman, meron siyang sariling gross income na 350,000 and then may allowable deduction siya na 200. Therefore, the net taxable income of B is 150,000. So again, if you want to compute for the tax due, gagamit ka ng tax table natin. Yan. Okay. Sige. That's number 4. Let's go to number 5. A and B inherited an income earning property. Okay. In 2021, change 2021 to 2020. Okay. Typo yan. So, dun sa number 5, yung in 2021, gawin mong 2020. Alright? Basically, 2 years kasi yung sa problem na yan. Without dividing the property. They had a net income of 230,000, which they deposited in a joint bank account. In 2021, they used the money, i-retain mo yung 2021, ha? They used the money in the bank to purchase another income-producing property. So, ibig sabihin, guys, kung ma-analyze natin, noong 2020, exempt pa siya kasi mere preservation. Wala namang ginawang reinvestment. Pero noong 2021, nag-reinvest sila, nag-purchase sila ng another income-producing property. Therefore, 2021, naging taxable co-ownership na. From the net income of 500,000 from the two properties, A and B each withdrew 100,000. A and B are brothers, which of the following is wrong or incorrect? Okay. Letter A. So, yung letter A, class, ibahin mo yan, lagay mo in 2020. Okay? Yung 2021, gawin mo 2020. So, dalawa lang yung ibahin mo, ha? Dun sa first sentence, sa second sentence, in 2020, without dividing the property. And then sa A, in 2020. The rest, i-retain mo as 2021. Okay? Analyze natin, class. Tanong is which statement is wrong? Letter A, in 2020, A and B each had an income from properties taxable to each as income of individual taxpayers. Correct. Kasi co-ownership yun, eh. Tama? Exempt co-ownership, dito sila. Individual taxpayers. Correct yung A. Letter B, the income of 500,000 in 2021 is income of a partnership, taxable income of a corporation. That's also correct. Kasi 2021, beyond mere preservation ka na. Okay? Nag-reinvest ka na, taxable ka na as a corporation. Okay? Therefore, B is also correct. Letter C, A and B each had an income of 250, taxable income of an individual, while yung letter D naman, A and B each had income of 100, taxable income as an individual. So, ano yung tama dyan? Actually, yung tama dito is dog. Okay? So, anong nangyari dyan, class? From the net income of 500,000 in 2021, from the two properties, A and B each withdrew 100. So, anong nangyari? 500 yung kinita ng part ng co-ownership. Ang winidraw ni A and B, tigwa 100 sila. Alright? Now, yung 100 na yun, yun yung dividends. Okay? So, again, pag corporation ka, syempre, kung how much yung dinistribute mo, yun yung dividends na magiging subject to final withholding tax. Tama? Ibig sabihin, class, hindi yung 500 yung subject to final withholding tax. Yung dinistribute na 100. That's why, dog, tama yan. A and B each had an income of 100, taxable as income of an individual. Ibig sabihin, dividend income siya subject to 10% final withholding tax. Yung C yung sagot dito. Incorrect yung C kasi it should be 100, not 250,000. Okay? For number 5, it's letter C. Number 6. In 2020, X and Y inherited income-producing properties from their mother with a reported value of 1 million and on which the estate tax was paid. So, class, i-clarify ko lang ulit. Very important kasi. So, yung co-ownership na yan, class, nung transfer kay A and B, magbabayad ng estate tax or donor's tax, ha? Hindi sila exempt dyan. Okay? Hindi sila exempt. Kasi ang pinag-uusapan natin, yung income na kikitain nila from the farmland. Got it? Kaya nakalagay dyan, on which the estate tax was paid. The properties remained registered in the name of the mother, but the net income of 40,000 from the property was deposited in the joint account of X and Y. In 2021, the property had a net income 70, from which each withdrew 15,000. In the same year, they sold the property for 3 million. Which of the following statement is wrong? So class, if babasahin mo yung 6, if i-analyze mo yan, walang any actions dyan na reinvestment or beyond mere preservation. Yung pagbebenta ng property dun sa second to the last sentence, hindi ibig sabihin nun na beyond preservation yun. Okay? So ibig sabihin class, for number 6, this is still an exempt co-ownership. Alright? So pag exempt co-ownership, tingnan natin class. Which of the following statement is wrong? Letter A. X and Y in 2020 each had an income of 20,000 from the property as individual taxpayers. Correct. Kasi pag exempt ka, individual taxpayers ka. Sa ITR mo siya, sa sarili mong ITR siya i-report. A is correct. B. X and Y became an entity taxable as a corporation. Mali yan. Okay? Yung pagbebenta mo ng property, hindi ibig sabihin nun na magiging taxable ka na. Okay? B is incorrect. B na yung final answer natin. Letter C. X and Y each had an income of 35,000 from the property as individual taxpayers. Yung 35,000 na yung class, yun yung 70,000 divided by 2. Okay? Correct yung C kasi exempt siya. Ibig sabihin, personal capacity na i-report yung income. Letter D, X and Y each had a capital gains tax of a selling price of 1.5 million. Plus yung 1.5 million is basically 3 million divided by 2. Okay, hati sila. And subject sa CGT yun, tama na 6%. So A, C, and D are all correct. Which of the following is wrong? Boy, because the ownership is still exempt dito sa given sa atin sa number 6. Okay? So that is co-ownership. Number 7 is a different topic na yan. So, pag-usapan naman natin class is number 7. Okay? So again, for this session, tatlo yung discuss natin. Okay na tayo sa partnership. Okay na rin tayo sa co-ownership. Okay? Actually, same concept lang sila. And then, last one natin is about joint venture. Okay? So, easy lang din to class, yung joint venture. So, yeah. So, let's start. Joint venture or JV. Okay? Joint venture. Sir, ano ba yung joint venture na yan or JV? Okay. So, usually class yung mga joint venture na yan, different companies nagta-tie up sila, okay, to undertake a project, okay? So, ang pinaka madalas nagpo-form ng joint ventures class, yung mga property developers, okay? For example, si Ayala Land. No? Si Ayala Land, well, gumagawa siya ng mga condominiums, okay? Gumagawa siya ng mga hotels, mga commercial properties. May mga projects si Ayala Land na nakikipag-tie up siya, okay? Nag-e-enter siya into a joint venture, alright? Ang common dyan class, isang property developer and landowner, yung may-ari ng lupa, nagpo-form ng joint venture yan, okay? For example, si Ayala, gusto niya magtayo ng isang hotel sa somewhere in Cebu, okay? Kaya lang, yung place na yun, ayaw ibenta nung landowner. So, usually, ang ginagawa dyan, JV, okay? Joint venture siya. So, class, ang pagkakaiba ng JV sa partnership, yung JV kasi, parang side project mo lang siya. Hindi talaga iyon yung main na ginagawa mo. For example, si Ayala, usually, ang ginagawa niyan, bubili ng lupa, and then nagtatayo ng mga properties, tama? Yun yung talagang line of business niya. Ngayon, may mga instances lang na kailangan niya mag-JV. Okay? Katulad nung instance na sinabi ko sa kayo kanina, na yung land, ayaw ibenta ng landowner. Okay? Doon na siya mag-JV. Okay? So, ibig sabihin, pag JV class, parang sabihin natin na side project siya. Okay? Hindi siya yung talagang main business mo. Okay. Anyway, iba pong property developers na usually may JV, yung SMDC, okay? So, SM Development Corporation, yung Rockwell, DMCI, and yung mga sikat na yung mga huge na JVs. Okay? Joint ventures. Now, ganito class yung general rule natin. For JVs, ang general rule natin, okay, all joint ventures are taxable. All JVs are taxable. Okay? As a normal corporation. Okay? Or as a regular corporation. As a regular corp. Pag sinabi mong regular corporation, well, meron siyang RSIT and meron siyang MSIT. And all concepts na tutunan natin sa corporation. Iyan yung general rule natin. All JVs are taxable as a regular corporation. Yan, meron tayong exceptions yung class. Okay? Dalawa lang yung JVs na exempt from income tax. Dalawa lang. Okay? So, ibig sabihin, the rest of the JVs, taxable as a regular corporation. Number 1, JVs undertaking construction projects. Undertaking construction projects. Okay? And then, JVs, okay, engaging in, dagdagan natin, energy, okay, blah, 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 agreement with the government. Agreement with the government. Mahaba yan, basahin natin. Okay? So, ulitin ko lang class. Ito yung concept, ha? Yung mga JVs na yan, ang general rule, lahat yan, taxable. Okay? As a regular corporation. Magbayad sila ng RSIT or MSIT. May dalawang JVs lang ang exempt. Undertaking construction projects and yung energy operations. So later. Kaya yung example ko kaya ng mga property developers, maraming ganyan kasi nga exempt sila from income tax. Got it? Kaya nag-JV sila. Okay, now, punta ka dun sa G-sheets natin. So sa baba ng co-ownership, meron kang JV dyan. Hindi basta-basta class stricto yan bago ka mag-qualify dun sa dalawa na yan, especially sa construction projects. Hindi basta-basta na construction company ka, exempt ka na agad. Hindi ganun. Ito yung mga requirements yan. So basahin natin class. Okay. Requirements bago ka maging exempt. Ito muna tayo sa construction projects. Number 1, or letter E. The joint venture was formed for the purpose of undertaking a construction project. Alright? Letter B, should involve joining or pooling of resources by licensed local contracts, that is licensed as general contractor by the Philippine Contractors Accreditation Board or PICAB of the DTI. Okay. So, ganito ibig sabihin ng class. Basahin mo natin yung dalawa. The local contractors are engaged in construction business. The JV itself must likewise be duly licensed as such by PICAB. Okay. Ganito kasi yung rules sa Philippines. No? Kapag contractor ka, sir, ano ba yung contractor? Yun yung mga nakikipagkontrata sa mga customers, okay? Construction contracts, applicable yan sa mga architects, no? Mga civil engineers, mga construction companies. Hindi basta-basta yan pwede makipagkontrata sa mga kliyente, okay? Kailangan meron kang PICAB license, okay? Or the Philippine Contractors Accreditation Board license, okay? Kasi meron tayong tinatawag na Contractors License Law, okay? Kailangan may license ka, may PICAB license ka before ka makapag-contract with different clients, alright? So kasi isipin mo lang ganito yan. For example, ikaw, bumasa ka ng CPA board exam. Pagpasa mo, hindi pwede magtayo ka agad ng audit firms. Hindi pwede yun kasi may mga requirements yan. Si BOA, bibigyan ka ng accreditation yan bago ka makapagtayo ng audit firm. Pero before ka maka-receive ng accreditation, kailangan mo ng years of experience, tama, may mga qualifications, siguro baka, I don't know if may exam, pero may mga application, etc. Okay? So kailangan mo nun. Ganun din dito. Kunwari, architect ka or civil engineer ka, pagpasa mo ng board exam, hindi basta-basta na pwede kang maging contractor. Kailangan meron kang PICAB license, okay? So, ibig sabihin, i-apply mo yan, may years of experience, I think may exam pa yan, and so on and so forth. Ganun yung equivalent niyan. Tama? Okay. So, ulitin natin yung requirements. First, the joint venture dapat, syempre, construction project. Letter B, yung general contractor, ibig sabihin, yan yung mga merong lisensya ng PICAB, general contractor. Okay? License dapat by PICAB, and then engage sa construction business, and the JV itself, okay? Dapat licensed by PICAB. So, ganito yan. For example, dalawang contractors, okay? Contractor A, contractor B, pareho silang construction company. Nagtayo sila ng JV, okay? Silang dalawa, under separate business sila, dapat meron silang lisensya ng PICAB. Yung joint venture na ipo-form nila, dapat licensed din by PICAB. Okay? Ganun siya. Now, meron din dito kasi sa baba, yung foreign contractors, pwede rin sila maging exempt JV, okay? The member foreign contractor is covered by special license by PICAB, okay? May special license, and the construction project is certified by the government, by appropriate tendering agency or the government office. Alright? So again, ito yung requirements before ka maging exempt. Okay? Hindi basta-basta yan. May dapat i-prove mo yan na qualified ka talaga. And then, yung isang JV na exempt, ito siya. Basahin natin, mahaba kasi. Engaging in petroleum, coal, geothermal, and other energy operations pursuant to operating or consortium agreement under a service contract with the government. Kapag ganyan yung JV mo, exempt ka rin. Okay? Bigyan na kita ng example para mas malinaw. Okay. So, example natin dito, class, sa pangalawan na yan is the Malampaya Project. Are you familiar with the Malampaya Project? So, I think nababalita yan kasi very controversial yan. Okay. Pero basically, it's a natural gas field located in Palawan. Okay. Yung Malampaya Project na yan, class, may tatlong shareholders yan. Okay. Number 1 is Shell, which has 45% stake. Pangalawa dyan si Chevron. Okay. 45%. So, si Chevron na yan under Udena Corporation. And yung pangatlo, class, is the Philippine government. Okay. Represented by the Philippine National Oil Company. Okay? Well, 10% lang yan. 45 plus, and 10%. So, as far as I know, yung Malampaya Project, it's a joint venture, okay, ng tatlong companies, Shell, Chevron, the Philippine National Oil Company, okay? Now, nag-qualify sila dito, therefore, yung JV nila na yan, yung Malampaya Project na yan, hindi yan nagbabayad ng income tax. Exempt JV yan. Got it? Yun. Engaging in petroleum, coal, geothermal, energy operations, dapat yung kontrata mo, yung kapartner mo dyan, government. Alright? Okay. Sige. So, para mas mag-gets natin yung class, magawa tayo ng illustration. Ito yung taxable JV. Okay, may taxable JV tayo. So, pag taxable siya, obviously, subject to RSIT and subject to MSIT. And then, ang tawag natin kay A and B, co-venturers. Okay, co-venturers. So, co-venturer A and co-venturer B. Since taxable si JV, it's as if shareholders si A and B. Okay, so yung share nila from the project, from the joint venture, will be considered as dividends. And, ayan, will be considered as dividends. On the other hand, if naman exempt JV, sir, paano namin malalaman pag exempt JV? Yung dalawa na yan, okay? Pag exempt JV, babayad sila ng 0%. Si co-venturers A and B, okay? May sarili-sariling ITR yan. Tama? Ito rin pala, may ITR din sila. Pero syempre, since taxable to, hindi pupunta yung ITR dyan kasi nga dividends yun. Dito papasok yan. Okay? So, yan yung structure natin kapag exempt JV. Now class, ito yung unique sa joint venture. No? Sa partnerships and co-ownerships, yung partners doon and co-owners doon, laging individuals. Sa joint venture, pwedeng individuals, pwede silang corporations. Okay? Nag-gets nyo yun? So, pag joint venture, pwedeng individuals, pwedeng corporations. So, ibig sabihin class, kapag babalik ka dito sa taxable JV, yung dividends, okay, kapag individuals A and B, subject to 10%. Tama? 10% withholding tax. Pero kapag corporations A and B, ano yung rule natin doon? Si corporation, nag-declare ng dividends sa corporation, ang general rule natin, exempt from dividends tax. Okay? Exempt from final withholding tax. Sige, so apply natin yan sa handles natin. Let's go to number 7. Okay? Number 7. Scenario number 1. We have 2 or 3 scenarios pala dito. Okay? So if on January 1, 2021, A company and B company contractors form a joint venture. Okay? Data on the JV and the parties of the venture, so tawag natin sila yung co-venturers. Alright? Are as follows. So joint venture, meron siyang gross income and expenses, A company and B company. So ibig sabihin, yung venturers dito, yung mga co-venturers, they are corporations. Okay? Tignan natin. So meron silang gross income, may expenses sila, quarterly income tax paid. So class, merong quarterly income tax paid because corporations sila. Nagbabayad sila ng tax every quarter. Compute for the income tax due from the JV and the joint venturers. Okay, so ganito gagawin natin dyan class. So number 7, scenario number 1, if the JV was entered solely to construct an expressway north and south of Manila and collect toll from users. So ito siya, construction projects. Mga construction projects. So ang assumption mo class, kapag ganyan yung wording sa problem, i-assume mo na nag-qualify siya sa exemption. Yung pick-up license, etc. Okay? So yung scenario 1, exempt JV yan. So ang gagawin natin ganito. So ito yung joint venture. Okay? Meron siyang gross income na 10 million and then meron siyang allowable deductions na 4 million. Okay? Therefore class, yung net income of the joint venture, net income tawag natin, hindi net taxable income kasi exempt siya. Okay? Is 6 million. Yung 6 million na yan class, well, didistribute natin yan kay A and B. Tama? Tig 3 million sila. Okay? So, compute natin si A and B. Obviously, zero yung tax na babayaran ng joint venture. Yung 3 million na yan, kay A and B natin kukumputin. Okay? So, sige, compute natin. So, si A, and then si B. Alright. So, si A, meron siyang gross income na 5 million. Tama? And then, yung share niya from the JV is 3 million. Okay? So, ibig sabihin, yung gross income ni A is 8 million. And meron siyang expenses na 3 million, tama? So allowable deductions, 3 million. Therefore, yung taxable income or net taxable income of A is 5 million. Tama? Because A is a corporation, subject siya sa 25% tax. Okay? So 5 million times 25%, you get 1 to 50,000. So lagyan natin 1 to 50,000. Actually, ito na yung sagot mo. Kasi ang tanong sa problem class is income tax due. Okay? Pero compute na rin natin yung income tax payable. So ito na yung final answer mo dyan, 1 to 50. Let's compute the income tax payable. Take note class na meron ka ng tax payment from the previous quarter na 500,000. So 1 to 50 minus 500, you have 750,000. This is your income tax payable. So answer mo dyan, 1 to 50 income tax due. Income tax payable is 750,000. Let's do the same thing for co-venturer B. Gross income of B is 6 million. Share ni B from the joint venture is 3 million. Okay, you have 9 million. Allowable deductions of B is 2.5 million. Okay, so 9 million minus 2.5 million, net taxable income of B is 6.5 million. Multiply natin by 25%. Okay, 6.5 million times 25%, you get 1,625,000. So tax due natin is 1,625,000. So this is our final answer. Pero nagbayad pa ng tax from previous quarter na 900,000. So 1,625 minus 900,000, you get 725,000 income tax payable. Alright, so ito siya. Exempt JV, corporation. Alright. So, scenario number 2, if the JV was entered into solely to engage in petroleum operations, pursuant to operating or consortium agreement under service contract with the government, lagay mo dyan class sa scenario number 2, same answers. Ito rin yung sagot mo dyan. Alright? So, same lang yan. Kasi parehong scenario 1 and 2, parehong exempt yan. Let's go to scenario number 3. Okay, sir, paano naman if A and B company are transportation companies and they entered into a JV wherein A will transport units south of Manila and B will transport units north of Manila. JV has remitted a total of 1.5 million quarterly tax payments. So, for this one, hindi siya nag-fall under dito sa dalawa. Therefore, taxable JV yan. So, ganito gagawin natin dyan, class. Since taxable JV yan, okay, lagyan natin dito, taxable JV. Alright, so meron siyang gross income na 10 million and then meron siyang allowable deductions na 4 million. Therefore, meron siyang net taxable income na 6 million. Multiply natin by 25%. Okay, 6 million times 25% times 0.25, you get 1.5 million. Okay, so tax due natin is 1.5 million. Alright, 1.5 million na yung class. Ang gagawin natin dyan, kukumpitin natin yung net income. Okay? Net income ng partners, ng joint venture, 6 million minus 1.5 million, you have 4.5 million. And yung net income, yan yung making, or the distributable income, yan yung basis of the dividends. Tama? So, ibig sabihin class, A and B will receive dividends. Tama? So, 4.5 million divided by 2. Okay? 4.5 million divided by 2, 250,000 sila. Tama? 250,000. Pero take note class, na yung dividends na yan, because si A and B are corporations, exempt from income tax yan. Tama? Take note, pag si A and B, pag individual sila, 10% final withholding tax. Because corporations sila, exempt from dividends tax. Therefore, yan yung marireceive nila. Got it? Now, sa separate capacity naman ni A and B, computin natin. Ito si A, ito si B. Okay? So si A, meron siyang gross income, na sarili niya is 5 million. Alright? And then meron siyang allowable deductions na 3 million. So 5 million minus 3 million, net taxable income is 2 million. Times 25%. 2 million times 25% is 500,000. This is the tax due. Okay? This is the tax due of co-venturer A. Okay? Ang tanong sa atin, computin na rin natin yung tax payments, yung income tax payable. So si A, nagbayad siya dun sa table. Quarterly income tax paid is 500,000. So tax paid, 500,000. So ibig sabihin class, wala nang income tax payable si A. Okay? So meron siyang 0 income tax payable. So final answer, tax due 500, income tax payable is 0. Class, balik pala tayo dito kay taxable JV. Okay? Yung tax due natin is 1.5 million. Okay? And then, nagbayad siya ng, nakalagay dyan, JV has remitted a total of 1.5 million quarterly payments. So, 1.5 million, ibig sabihin class, 0 yung income tax payable of the JV. Okay? So, si JV, income tax payable is 0. Si co-venturer A, income tax payable is 0. Okay? Take note class, yung dividends, hindi siya pumunta dito kasi exempt yan. Huwag mo nasasama dito yan. Si B naman, meron siyang gross income na 6 million, alright? And then meron siyang, what else? 6 million, 2.5 million allowable deductions. 6 million minus 2.5, net taxable income of 3.5 million. Multiply natin by 25%, okay? 3.5 million times 25%, you get 875,000. And then, take note class, ang ni-remit ni B is 900. Mas malaki yung na-remit niya. Okay? 875 minus 900, actually merong refundable or creditable si B, 25,000. Refundable or creditable, 25,000. Alright, so that's your answer. Got it? Ilan na lang? Uy, konti na lang. Dalawa na lang class. Let's go to number 8. Okay. X builders and Y development. Both domestic corporations are engaged in the construction business. Okay? And they form a joint venture, XY Inc. with an agreed P&L ratio of 60-40. And then, for X builders and Y development, respectively. Alright, XYZ are all licensed vehicle cab and eligible for tax incentives. So ayan, explicit na eligible for tax incentives. Pero kahit hindi sabihin class, usually kapag silent, basta sinabi ng construction company, exempt yung treatment. Summary information for the three entities are as follows. So meron kang JV, meron kang X builders, may Y development. Question number 1. Okay, this is 8 ha. Question number 1. Determine the income tax liability of the joint venture. Sagot mo na dyan is 0. Okay, kasi exempt yan. Tama? And then, tingnan, pero computin na rin natin yung net income niya. So yung JV, meron siyang gross income of 12 million, and then meron siyang allowable deductions of 9 million, meron siyang net income of 3 million. Okay? Yung 3 million na yung plus, si X and Y, maghahati sila. Pero take note, hindi sila equal. Okay? 60-40. 60% kay X, so 60% of 3 million is 1.8 million. 40% of 3 million is 1.2 million. Okay? Question number 2, determine the income tax liability of X. So lagyan natin dito sa X. Right? So si X, meron siyang gross income from his own na 3 million. And then, meron siyang allowable deductions na 1.8 million. Meron siyang share na 1.8 million. Okay? So, ibig sabihin, net taxable income of X is 3 million. Multiply natin by 25% because corporation si X, 3 million times 25%. Yung income tax due is 750,000. 750,000. Income tax due or income tax payable, same lang, 700. Actually, income tax due, okay? Income tax due is 750,000. Now, sagutin na rin natin si Y. Okay? So, si Y, meron siyang gross income na 4.5 million. And then, meron siyang allowable deductions na 3 million. Meron siyang share na 1.2 million. Therefore, so 4.5 minus 3 plus 1.2, 2.7 million. Okay? 2.7 million, multiply natin by 25%. You get 675,000. 75,000. Income tax due of co-venturer Y is 675,000. Let's go to question number 3. Assume instead that X and Y are both engaged in the transportation business. Determine the income tax liability of the joint venture. So, ibig sabihin class, hindi na siya exempt joint venture. Okay? Taxan na natin siya ng 25%. Gross income of 12 million. You have allowable deductions of 9 million. Net taxable income of 3 million. Multiply natin class by 25%. Okay? You get 750,000. Tax due of the joint venture because taxable joint venture siya, 750,000. Alright, let's go to number 9. Last item na yata for joint venture. May konti tayong theories, but number 9. A company is an owner of a large tract of land. B company is a construction company. A and B entered into a consortium in which A will contribute the land and B will construct subdivision. Houses on it. A and B will divide the property between them. A and B will sell the respective shares in the undeveloped property, which statement is incorrect. Okay? So sa number 9 class, if analyze mo yung given na yan, yung isa landowner, yung isa construction company. So sabi ko, pag silent yung problem, assume mo na na-meet niya yung requirements for tax incentives or tax exemption. Okay? So ibig sabihin class, yung JV dito is a tax-exempt entity. Okay? Tingnan natin. Letter A. A company and B company do not constitute a taxable entity. Sino yung A company and B company? Isang company lang yan. Yun yung JV. Okay? The JV does not constitute a taxable entity. That's correct. Okay? Kasi exempt siya. Letter B. The JV is not taxable on their allocated shares in the developed property. Tama yun. Yung JV hindi taxable yun. Ang taxable dito, si A company and B company under separate capacity. Okay? C. A company and B company or the joint venture is one taxable entity. False. Exempt yan. So C na yung sagot natin. Letter D. A company and B company, the joint venture, is taxable on the sale of the land and houses allocated to them as separate taxpayers. Yes, separate taxpayers. Kasi kapag exempt yung JV, yung kikitain mo dyan, yung income mo dyan, you pay under separate capacity. Okay? Answer for number 9 is letter C. Let's finish this by answering the rest of the theory questions. Okay, let's go to number 12. Okay, 12. It arises, theory number 12. When two or more heirs or beneficiaries inherit an undivided property from a decedent, or when a donor makes a gift of undivided property in favor of two or more donees, co-ownership, letter D or dog for number 12. Number 13. First question, is a co-ownership taxable? No, because the activities of the co-owners are limited to preservation and collection of income. True yung statement 1. Second question, is the share of co-owner taxable? Yes, because each co-owner is taxed individually on his distributive share in the income of the co-ownership. Correct. Okay? Kapag co-ownership, pag exempt co-ownership, babayaran mo sila on your separate capacity. Okay? Ni co-owners. A yung sagot natin for number 13. Number 14, which of the following is correct? A joint venture for undertaking construction projects is not taxable as a corporation. That's correct. Okay? Siyempre, ang assumption natin dyan, nag-qualify siya sa tax incentives. Letter B, a consortium for energy operations pursuant to an operating consortium is not taxable as a corporation. Parang example natin sa Malampaya project. That's correct. Exempt yan. Letter C, a co-ownership where the activities of the co-owners are limited to the preservation and collection of income is not taxable. That's also correct. Dog is the answer for number 14. Number 15. Statement 1, joint ventures, regardless of the purpose, are generally exempt from corporate income tax. Mali yan. Tama? Joint ventures are generally taxable. Okay? Dalawa nga lang yung exempt. So, generally taxable sila. False yung statement 1. Statement 2, the share of a co-venturer corporation in the net income of the tax-exempt joint venture is subject to corporate income tax. Okay? Ulitin natin. The share of a co-venturer corporation in the net income of tax-exempt. Okay? Pag tax-exempt, magpo-form part siya of the ordinary income of the corporation. Okay? Pero kapag taxable, hindi yan. Kasi exempt yun. Statement 2 is correct kasi sabi dyan tax-exempt joint venture. Okay? Boy yung sagot natin. Only statement 2 is correct. Okay. Statement 1. The share of a co-venturer individual in the net income of a tax-exempt joint venture or consortium is subject to normal income tax. Pag tax-exempt, okay, that's correct. Tama? Pag correct, pag tax-exempt, normal income tax yan. Okay? Sa separate capacity ng individual. Okay. Statement 2, the share of a co-venturer individual in the net income of a tax-exempt joint venture or consortium is subject to creditable withholding tax of 20%. Actually, class, 15% yan. Okay? So, sa statement 2, lagyan mo yung 20%, gawin mong 15%. So, A yung sagot natin. Only statement 1 is correct. So, yung sagot natin kanina, class, iba kasi tax due kasi yung hinahanap natin. Tama? So, assume na lang natin na tax due yung tanong sa atin. Pag tax payable, syempre, i-consider mo pa yung withholding tax. Got it? Okay, parang ginawa natin sa GPP. Pero sa joint venture, 15% yan. Number 17, the share of a co-venturer individual in the net income after tax of a joint venture as a corporation is, kapag individual, okay, and then tax, asan yan? Of a taxable joint venture, magiging subject to 10% final withholding tax. Boy yung sagot natin yan for number 17. Number 18, the share of a co-venturer corporation in the net income after tax of a joint venture. Kapag naman corporation, exempt ka naman sa dividends tax. Dog yung sagot natin sa number 18. Number 19, last item. Statement 1, a joint venture for undertaking construction projects is not taxable as a corporation. True. Statement 2, a consortium for energy operations, blah, 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 is not taxable as a corporation. True. Statement 3, a general partnership is not taxable. False. Pag general partnership, ordinary partnership yun. Dapat general professional partnership. Okay, that's why false yung 3. Para maging true yung number 3, a GPP is not taxable. Okay, yun. Statement 4, a co-ownership where the activities of the co-owners are limited to the preservation and collection is taxable as a corporation. False. Exempt siya. Statement 1, true. Statement 2, true. Statement 3, false. Statement 4, false. Final answer is boy. 2 of the above statements are true. Okay, so that's the end of our discussion of partnership, co-ownership, and joint venture.